Hi everyone, good to see you again all. I hope you all will be fine. Please subscribe my channel for more latest updates. 7 Best Money Market Funds for 2023. Investors looking for safety of principal and competitive yields may like these money market funds. The recent volatility in the bond market has prompted many investors to re-evaluate their portfolio strategy, especially in the realm of fixed income assets. The damage can be seen in the returns of the popular iShares Core US Aggregate Bond ETF ticker AGG, with its price dropping 2.3% year-to-date as of October 26. Longer duration funds felt even more pressure, with the iShares 20-plus year Treasury Bond ETF TLT sliding nearly 14% year-to-date. The bond market appears to have accepted the potential of a higher-for-longer interest rate environment following the September meeting of the Federal Reserve's Monetary Policy Committee and other recent comments from central bank officials. Market participants reacted accordingly, with the benchmark U.S. 10-year Treasury yield briefly hitting 5%, fueled by the ongoing volatility from the Israel-Hamas war. Given such a scenario, some investors are inevitably questioning the need to shoulder undue duration and credit risk for yield. With the surge in short-term rates, less risky options like money market funds are now providing yields in excess of 5%. Money market mutual funds are great investments for short-term, conservative investors, says Nafis Smith, principal and head of taxable money markets at Vanguard. This is because they typically invest in very liquid securities with the objective of preserving your capital while also providing income at prevailing market rates. These funds can act as a holding ground, providing competitive yields until there's more clarity on the broader financial landscape. Their portfolios usually consist of high-quality, short-term assets like Treasury bills, certificates of deposit, repurchase agreements and commercial paper, which helps them maintain a stable net asset value, or NAV, per share, of $1. Money market funds can be a great way to save for short-term goals, like buying a car, a down payment or building your emergency savings, says Sofo Prak, a certified financial planner and financial advisor at Vanguard. Generally, if you have a planned expense within 1 year, a money market fund can be a good investment option for it. Here are 7 of the best money market funds to buy now. 1. North Capital Treasury Money Market Fund NCGXX. Investors looking for the best money market fund should weigh fees as a primary consideration. High fees can directly eat into the net returns paid by a fund and cause a significant drag on performance. By screening for low fees, investors can easily address a common risk that contributes to long-term underperformance. When it comes to low fees, few money market funds can match NCGXX. Currently, the fund's manager has implemented an indefinite fee waiver to bring its annual expense ratio to 0%, making it virtually free to invest in. As a government money market fund, NCGXX primarily invests in Treasury bills and repurchase agreements collateralized by cash or government-issued securities. Currently, investors can expect a 5.4% 7-day SEC yield. 2. Fidelity Money Market Fund SPRXX. Investors on Fidelity's brokerage platform can easily purchase SPRXX, which charges no transaction fees and does not require a minimum initial investment. As a prime money market fund, SPRXX is also able to invest in corporate securities like commercial paper in addition to the usual treasuries, certificates of deposit and repurchase agreements to try and boost its yield. The main advantage SPRXX possesses is a long track record and high assets under management, or AUM. With an inception date of Jan. 23, 1989, and current share class AUM of $9.5 billion, investors have assurance that this fund is properly managed and well capitalized. However, the high expense ratio of 0.42% may be off-putting to cost-conscious investors. SPRXX pays a 5.1% 7-day SEC yield. 3. Fidelity Government Money Market Fund (SPAXX). SPRXX is fairly safe and has withstood many market downturns, but its holding of commercial paper does add a higher degree of credit risk. Investors looking to minimize the probability of default can opt for a government money market fund like SPAXX. Unlike SPRXX, this fund only holds government-issued treasuries, floating-rate securities and repurchase agreements. The downside of this is a slightly reduced 7-day SEC yield of 5%. Historically, SPAXX has also underperformed SPRXX over the past 10 years, returning an annualized 0.9% versus 1% as of Sept. 30. Still, risk-averse investors prioritizing safety above all with their money may prefer to sacrifice a bit of yield in exchange for higher credit quality. SPAXX also charges a 0.42% expense ratio. 4. Schwab Value Advantage Money Fund Investor Shares (SWVXX). Schwab's competitor to SPRXX is SWVXX. This fund undercuts Fidelity's main money market fund offering with a lower 0.34% expense ratio, and also features no minimum required investments. As a prime money market fund, SWVXX is able to hold commercial paper, time deposits, bank notes and certificates of deposit, in addition to the usual treasury bills and repurchase agreements. From its inception date of April 30, 1992, to September 30, 2023, SWVXX has returned an annualized 2.4% with all distributions reinvested. While this may seem modest, keep in mind that this was during a period of low interest rates. With rates much higher at present, the fund is now paying out an attractive 5.2% 7-day SEC yield with very low risk. 5. JPMorgan Prime Money Market Fund (VMVXX). Another money market fund that has attracted a high amount of investor capital is VMVXX. Since its inception on November 15, 1993, this fund has swelled to around $77.4 billion in AUM. As a prime money market fund, VMVXX holds the full range of treasury bills, repurchase agreements, floating rate notes, commercial paper, certificates of deposit and asset-backed securities. That being said, this fund has some disadvantages that make it less attractive than the previous options. For instance, there is a minimum initial investment requirement of $1,000, and subsequent investments have to be at least $50. The fund also charges a fairly high 0.5% expense ratio, making it more expensive than even SPRXX. At present, investors can expect a 5.3% 7-day SEC yield. 6. Vanguard Federal Money Market Fund (VMFXX). NCGXX may be offering a 0% expense ratio, but keep in mind that is in place due to a waiver. Although the fund manager expects it to continue indefinitely, there is no guarantee. Investors looking for another time-tested money market fund with low fees may like VMFXX, which currently charges a 0.11% expense ratio and pays a 5.3% 7-day SEC yield. As a government money market fund, VMFXX holds repurchase agreements, treasury obligations and treasury bills, with 155 holdings at present at an average maturity of just 20 days. With around $265 billion in AUM, this fund is extremely popular and well capitalized. However, keep in mind that to buy VMFXX, there is a $3,000 minimum investment requirement. 7. Vanguard Municipal Money Market Fund (VMSXX). Like most investments, the interest paid out by money market funds is subject to taxation if held outside of a tax-advantaged account like a Roth IRA. For investors in high-income tax brackets, this can result in a significant drag on their returns. To mitigate this, investors can consider a municipal money market fund like VMSXX, which offers potentially greater tax efficiency. One of the benefits of investing in VMSXX is receiving federally tax-exempt interest income, PRAC says. This is because the underlying holdings in the fund are themselves exempt from federal personal income taxes. Otherwise, the fund acts as a normal money market fund does, maintaining a stable NAV per share of $1. VMSXX currently pays a 4.1% 7-day SEC yield and charges a 0.15% expense ratio. Thank you. Take care.